beep, 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 beep. Breaking news. We are here in Knoxville this morning. We are here in Indianapolis this morning.
Present.
And we are here in Helsinki this morning.
That's what I say. Helsinki.
Yeah. Helsinki? How do they pronounce it in Finland?
Oh, I don't know. It's their language. If you've ever heard Finnish, it's like a combination of Lord of the Rings and one of those made up languages by like Tolkien or something.
Yeah.
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 How do you learn that language? I mean,
have you seen any Vikings, Dan?
A lot of, you know what? This is for a small country.
Yeah. This
is like big punk rockers.
Yeah.
A lot of black. A lot of the teens wear that. Maybe
golf.
Because it's cold all the time and it's dark. Yeah. That would go along, right? Punk, black.
Oh,
yeah. But it's a beautiful place right near the sea. But you got to be a rugged person to just, it's cold all the time and dark. You just got to be, I'll tell you, the old people look much sturdier than the old people, and they look like they're,
they've seen a few. They've seen a few things. 3% in the market doesn't phase them.
No, not at all.
And how you can tell you could tell they're rugged. In the U.S., you might get in the summer when it's warm. They call it here in the U.S. we might call it drunks. They call it professional drinkers in Finland, and they'll be sitting in gazebos. They'll shovel the snow off of the thing, put their 6-pack there, and sit down. Anybody who drinks beer in 20-degree weather outside, they got my respect.
I love it.
Anybody who can do that. Yeah.
Which reminds me, let's take these guys to the cold streets of Chicago. They don't want to hear about Finland.
That's
they
want
to hear about the cold streets of Chicago.
Back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
So yesterday, watching the market, it was one of the crazier days, not for the nuts part or anything like that, but just how orderly it was.
Yeah.
Like from the open, they basically just dropped them for like 5 hours. But it wasn't like Panic at the Disco.
Yeah.
It was just, and I did see last night, I think like ES minis, the options, traded just over 1 million contracts, which is super low.
Yes.
And so I think there wasn't a lot of volume. And I don't know. I mean, I think liquidity is being drained from the market. But Dan, I mean, you've been in these environments before. What's it look like when the market's just low volume and you're having moves like this,
Yeah. And I'll tell you, people used to always say, like, I remember because I used to always have to work it. It was the day after Thanksgiving. It'd be like a half day. And so everybody say, well, it's going to be dead. It's quiet. But some of those have been brutal moves because if you don't have a lot of volume, it's easier to move the market. It goes both ways. Yeah. And so, I think yesterday, the whole thing, yes, low volume definitely can move it. But, when you look at the catalyst, it wasn't like it'd be one thing to say, okay, China and US, here's some concrete stuff. But to say that, at least for this particular catalyst, where President Trump is saying, hey, I don't like this guy, that to me is so normal, right? It's just, that stuff happens all the time, right?
Yeah.
I don't like this guy. He's not doing what I want, but that's not enough to, are you going to take the market down 3.5%, 4%? We got to what, down 3% yesterday? Most of a lot of your sectors, we were completely red in the all the main 11 sectors in the SPX, XLK, XLY, all those guys were like down over 3%. I'm like, really? We don't know Trump by now, right? The fact that he says, I don't like this guy and the guy should raise interest. I think what should tank the market is that he would have said, I want you to lower the interest rates immediately. And the guy said, yes, sir. Then would you rather have Trump in control of the market or Powell? I'd rather Powell, right?
Yeah.
At least he's a little more, that's his area, a little more stable. He's proved it historically and everything, but.
Well, they've got different mandates.
Yeah, different. Yeah.
Yes.
So you don't want the guy whose goal to get the stocks in the next 4 years at all-time highs.
Yeah.
To run the economy necessarily. But which is a counterintuitive, because I think a lot of people say, well, that's exactly what you want. But I think if you've been trading or you understand markets a little bit, you understand that's maybe not what you want. Let's take a look real quick at futures from the trusty TraderVate market profile chart here I've got. And so you can see basically this is yesterday's action, right? Pretty orderly. We just dropped, and then in the afternoon we kind of just settled a little bit, but it was had a rally into the end of the day. This orange line is where we're at right now, current futures prices. Notice again, and we talked about this yesterday a little bit, which is funny because we're right here. We said basically yesterday we need to get back to 52.49. That puts us back into last week's range.
Yeah.
And then, you need to make progress on that. If we can't get over that, well, then we're just probably going to continue down and try to hit some of those downside targets. But you can see we're here. That's the battle. You can see we barely got into range overnight and didn't spend much time there. So it's a tricky market. I feel like it's a market that just has a lot of nuance in it, and I feel like with volumes, one thing I've noticed is that when you don't have a lot of volume pushing prices, like an auction, when you don't have a lot of people at the auction, you're going to have very specific price points. And so like if we for instance open and we hit this here, to the T, which happens all the time, what that's going to tell me, or let's say we rally and we get up to here. This was a point where the majority of time was spent on the 17th, and we back off it. That just tells me that there's the volume. We just kind of have day time frame traders who are just like looking at charts. They've got their line on the chart, and they're selling right there.
Yeah, you're saying there's not big institutional players taking a position either way. It's interesting because I think we basically in SPX went right down to 5,100 and then just right back up.
And I wonder, when was it? How far back do you got to go to get volume like we had it yesterday?
Oh man,
that is really low.
Yeah, it's really low. Now, what'll be wild today is if it's low on an up move. That actually doesn't give me any confidence.
No.
Either, because basically, like if like that day we went up 10%. Now, obviously, that's a historic day, but that's what it looks like when everyone's piling in. There is no like there's no specific price point. There's no line on the chart that people are going to be like, okay, I'll stop buying here. Like it's indiscriminate in the buying. This is not that right now. That we're in an environment where these levels kind of hold because everybody's looking at them and there's not a lot of volume, so the people playing are watching those levels. It's pretty simple, you know.
It's
You
kind
would
of.
think-
Oh, go ahead, Dan.
No, I say you would think though on the upside, being in the trading pits, any kind of upside, just a lot of natural sellers of calls, and
Yeah.
and now you actually have some premium, right, with the VIX.
Yeah, that's
I mean,
right.
the VIX looks like it'll open down to near the 30 level, but you would think there'd be plenty of sellers of calls, much more liquidity on the upside, because it's generally a little bit slower. So yeah, I think that'll be good, something to follow up on tomorrow, just the volume and see
Yeah,
if it doesn't pick up. Yeah, it's like what's going on.
Yeah, for sure. All right, guys, you ready to look at a test?
Yeah.
Okay. I'm about to give you, I just want to preface this. I'm about to give you the perfect strategy. I found the perfect strategy.
I love it.
And I'm always thankful for that, because now, as anybody who's been trading for a long time, you get really excited when you find the perfect strategy. And you're
That's
like,
right.
I can retire now. I can finally find peace.
Yeah.
And here's the perfect strategy. You ready for it? Just sell calls.
That's right.
Just sell calls.
Yeah.
Year to date, just sell calls. Don't look since dailies. Don't look last year. Don't worry about any of that stuff.
That's what's been working this year.
This year to date, just sell calls. What this is.
That's a song, Troy. You got to get a song there.
Just sell calls.
Yeah. The blues. Yeah.
That'd be good. So this is, you are year to date selling a 7-day put spread.
Call spread.
So yeah, every time we did this before, Matt's like, call spread. I'm so used in the market to just selling put spreads.
Oh yeah.
Anyway, so it's a 25 delta call spread, 7 days out, and you're opening it basically at 9:32 if the market is up at all, right? And so anytime, so today would qualify. Basically, we're up, we're open, we're going to sell a 7-day 25 delta call spread. And the only exit we have is, scroll down here, if the 25 delta gets below 45. So if the 25 delta turns into a 45 delta or greater.
So basically getting real close to the money.
Yeah. Yeah. We're going to get out.
Yeah.
It has done very, very well this year. You're allocating 10% portfolio.
No profit target.
You're doing really, really well. Dan, someone comes to you and says, I found the perfect strategy. You just sell calls. What would you tell them?
Just because I'm so pessimistic because I haven't seen the perfect strategy in a lot.
Yeah,
ever,
that's right.
I'd be like, but it's, this type of, again, when you're selling a out of the money call credit spread, overall it's a pleasant experience, right? You're going to win more than you lose probably. But this particular trade is going to be short. I'm guessing for every one contract, I could be wrong, you might be 3 delta short. So you're leaning short. And so, if you look at talk about curve, right? If someone wanted a curve set, the first 3 months of the year, mostly in a downtrend, right? Yeah. If you got a 3 delta short, you're doing pretty good, right?
Yep.
Life's good, except when it goes against you, you get one of those bum rushes to the upside. Katie bar the door, but yeah, it looks pretty good.
Can we talk a second about kind of the risk reward and the structure, the setup of this backtest, Troy?
Please.
Yeah.
Do.
Oh yeah.
So we got a 25 wide here. So the maximum, if there was no exit, I don't think you checked exact strike offset, but it's going to be close on a 70T. So you're risking 2,500 if you didn't close it. And for that, you're getting a credit of about $7. Can you scroll down, Troy? And we'll take a look at what the credit received is. Yeah. So earlier in the year when VIX was lower, a little bit later, but somewhere around 650 to 7. So just from a straight risk reward standpoint, you're risking about a 1 to 3. So why does this work? Well, what's interesting is when you add the risk management of having that leg delta exit, that means that when you get exited on a delta move, it's not a stop loss. When you get exited on the delta move, you're going to lose roughly a little bit less than the value of the credit because of the choice in the leg delta, right? So you're going to lose about 650 to set. Yeah. 524 actually is the average loser. And because you're winning more than half the time, you're winning more than half the time, and your winners are a little bit bigger than your losers. So that's why the math kind of works in your favor on this.
Yeah. And you bring a good point, Matt. People get focused on a lot of times, do you want a good risk reward with credit spreads, or do you want a good probabilities? And people say, well, risk reward. And I'm like, no, I mean, it comes down to the management, right? Because if you're on a high probability, you could sell an 8 delta and someone may say, that's a horrible risk reward. Well, it may win all the time, right? And I think I think this has a reasonable risk management plan that you're exiting it.
Yeah.
You're exiting at a proper time. You're not gonna, if you wait till we talk about the tested side with an iron condor, where the tested side would be here, you're just doing the call side. So when we go up, if early in the trade it gets to the short strike, you could get hammered, right? And you're not even at the short strike. So I like the fact that when the delta goes from 25 to, is it 45?
Yeah.
Yeah,
you're getting it before it really starts getting in the money, and you're keeping the losses. What was the biggest loser here, Troy?
7.25.
That's it?
Mm-hmm.
That's pretty. So, I mean, you would think you could have some more room to let it roam, because, I mean, the only thing with a 25 delta, isn't it, say the 25 delta says there's only 25% probability we'll finish over the short strike at expiration, but there's a 50% probability we'll touch that strike.
That's
so, right. But yeah, I think that guardrail is reasonable. Now this is just for how many months, this test?
This is January 1st of this year till yesterday.
Okay,
this is literally what's working right now.
Right now,
we have people in the community that, a lot of people backtest for core stuff that has worked for 5 years, 7 years, really long time. There are also people who sprinkle in the jalapenos here and there, the spice, what's working right now, what's something that I wouldn't do longer term, but maybe people who have a little bit of sense for the market or want to diversify their portfolio in a small way. As Troy's running right now, like this is the real what's working year to date. Running this 31 times, it's won almost 90% of the time year to date.
Troy, what did you just tweak to it on your last tweak here?
I took the guardrails off. I took the deltas off.
Oh, so no
ride or die.
Wow.
And again, you don't want to do this. I mean, I said this is an idea generation, but it's not. Don't sell call spreads without an exit plan. It will not work well for you.
And a long term. I mean, Troy, can you run this just like for the last 2 years or whatever? It's going to be a bloodbath, I'm sure. I doubt
it won't take long because you're going to lose all your money.
We probably make it a month.
Well, you're talking most of it was an upward trending market over the last few years, so that shouldn't be great for this. Something
else that's interesting too. We've talked a lot about execution risk on this show. And the idea that if you're new, especially, not financial advice, but you want to make sure you're getting a good fill or whatever on a lot of these trades. This is a 2-legged spread and it's 7 DTE. So even in a choppier market or a market with big moves, the exit and the entry and the execution is going to look different on this, a 2-legged spread, 7 DTE, then it's going to be like on, a 30 DTE or 0 DTE. They're all going to look different.
Sure.
Troy's doing some live back testing. Here we go.
Well, 2 points like Matt said. I two quick points. One regarding this trade, one not. But I think it's kind of neat. I would recommend that. Like if like Matt said, okay, if you're in the option Omega community, you're putting X amount of your capital into your core stuff that's passed rigid tests over 4 years. But I'll tell you what, I'd always want to have X amount, whatever percentage that would be, right? 10, 15%, what's working now, because that's important, right? What's working now. And you think of the environment we're in now, the big candle, it could go a while. The other thing with this is when you're talking about a 7-day credit spread versus a 30 or 40-day credit spread, you're talking gamma, right? Those deltas go against you quicker, much quicker. So in an uptrending market, a 7 delta call credit spread, I'd rather maybe be further out, because anything to slow the deltas moving against you, because that's how you lose your money. But
I think that's right. And I think that this type of thing, to the point of saying this is working right now, there are a lot of philosophical mindsets about trading in general, but one of the things is there's 2 camps usually. There's the evergreen camp, which is to say I'm willing to put up with perhaps larger drawdowns for a strategy that over time will just work.
Yeah.
And there's plenty of those.
Yeah.
Then the other camp of saying I'm looking for max alpha all the time, the highest CAGR, the highest MAR wins, and I'll know when it stops working. Both of those things, in my mind, if you're in one camp or the other, you need to meet in the middle a little bit, because both of them, strangely enough, deal with the same type of risk. And the risk for the camp saying, I'm going to find the newest thing, is you usually won't know until it's too late that you've lost, right? But here's the funny thing I've kind of seen too, is the people who are in the evergreen camp kind of deal with that as well. And they're actually a little bit sometimes more prideful, because it's like they'll take 5 losses in a row and they're like, but it's still good. It's still a good test over time. And you're like, well, I mean, data's always changing. I don't know. We'll see.
I mean, I think it can. I mean, one thing, the nice thing is when you have a trade on, 99% of the time, there's only 2 places to look, right?
Yeah.
Price and volatility. And if you're looking at the implied volatilities in the VIX and you're looking at the price, and you have 2-3 losers in a row, not that, I mean, I think that's normal depending on the strategy, but it's nice to do an autopsy and just say, what's going on, right?
Yeah, that's right.
That's
right. And I think for the evergreen things, I will say if what more data gives you in general is basically saying, well, maybe 5 losses in a row is in the historical significance of this, and so we're fine. Right. Yeah. But both sides have to measure basically when the data is changing. That's my point, is both have to constantly kind of measure the effectiveness of a strategy over time.
Well, and that's true. And I mean, to your point, the data is changing. I've said this a lot, but last fall, double calendars did something that they had not done in years. And then in a couple weeks ago, during that big movement week, they did something the other direction. I mean, double calendars that had never reached a 50% profit target or a 60% profit target were tripling. In fact, they were going for 200%. So and that's with, 5, 6, 7 years of back testing. So the data is changing. And that's a really interesting discussion of how do you balance knowing when something isn't working, and is that a long-term, what are your data points of if this is a long-term structural change in the markets, or is this an accounted for drawdown within parameters?
Yeah.
I mean, my gut would be that in most cases, it's not a structural change in the market, but especially with mixed month spreads, I think if you really, because they are more squirrely than when you're dealing with spreads where everything is in the same month. But when you're dealing with mixed month and you look at, I think the only way I've learned about mixed month, see what's working, was that two ways. One, track the implied volatility of each leg during it. And you can see clearly, not clear, but you'll be able to see, wow, look at how they're crushing, even though VIX is going up, it's not helping us. Or even though VIX is going down, which should hurt you, it's not hurting you. And so I think going over the implied volatility of the different ones has helped me a lot. I mean, and then you could look at maybe, especially on short-term stuff, you could look at the news type thing. And the other thing is looking at competing strategies. Like, Matt, I remember we talked about the double calendar thing. At the same time, we were doing some double diagonal strategies in our, and they were working better. And the other thing is, I think when you're doing mixed month spreads, the thing that I noticed is, if you really want something that looks absolutely beautiful on a graph, take a mixed month calendar and take 3 days difference between the long and the short. You're like, wow, does this thing look gorgeous? But what people miss with mixed month spreads is sometimes you got to get the longs a little bit further out than the shorts, even though it costs more. It lets the shorts breathe. I know that's not when I know there's many people who think theoretical means actual. It doesn't. Theoretical Greeks, and all those Greeks are theoretical. And I found a lot of times, we'll have 8 different people on with calendar trades on, and the ones with the farthest room between the longs and the shorts, even though they're more expensive, do better.
Yeah.
Right. And it's more expensive. So I think sometimes, watching the implied volatility, but having different durations, my long's a little bit further out, maybe than my, even more expensive. Those subtle differences I found can be, big things. But again, double diagonals are going to have less volatility risk per dollar than your double calendars. Double calendars, I like the best out of the doubles because they're the cheapest, but they're going to have a little more volatility kick than a double diagonal.
Yeah.
Anyways.
Yeah. Well, we continue on. Who knows what we may have one more data point. If we can finish up for the day, that'd be amazing. Right. If we finish down for the day, then this strategy has continued to work. I mean, basically, so either way, we'll look tomorrow, and then, it felt like Thursday. I was about to say last day tomorrow, but tomorrow's Wednesday. That's crazy.
I like the last day part. Yeah.
And not much going on this week in the markets not much economic scheduled news.
Well, Tesla tonight.
Earnings, besides
earnings. Yeah. And tomorrow we might look at some Tesla stuff just for the fun of it.
Yeah.
The day after earnings, see what we can go. Go ahead, Matt.
I was going to say there's some interesting stuff with Tesla earnings. Have historically, Tesla's kind of the OG meme stock, maybe Micron a little bit back in the day. Shout out Dan, but Tesla earnings volatility is its own whole discussion, and there have been a couple outlier moves recently.
Well, it's 50% down.
Yeah. But I mean, last year there was some blowout stuff. Sure. We can look at it tomorrow.
Yeah. I mean,
what's the expected move for tomorrow is what's $20. So that's like 10%, right?
Yeah. 10%. I mean, here's the thing. I went to bed thinking about this last night, which is really sad to me. But we have some Fed speeches today. Thank you, Stefan. I really think Tesla, I'm never this way. I'm always long gamma. It's going to hit the expected move and more. I really do see, I was trying to think, like, if you put a gun to my head and had to put a Tesla position on, I really think selling the move, this fading the expected move.
Oh, fading the expected. Yeah. So you have something that,
maybe a condor, but a condor or butterfly or something. But my thought would be, I don't think we're going to get an upside surprise, but I'm almost more nervous about upside. Actually, saying that out loud, I'm not really. So maybe just a condor. Maybe just a condor or something.
Yeah.
Something cheap.
Are you nervous at all? I mean, with this, like you said it, Troy, Tesla's down 50% in 3 months. So you would think the contrarian would say,
That's
we can
my
have
thought.
40% move up, right?
That's
It should be $60.
Yeah. I don't see this. I don't think we're in the market for 30% move ups. We talked about that yesterday,
That's
actually.
right. That's a good
I don't think
point.
we're in the market for that seasonally wise. But I also don't expect Tesla, even with bad stuff. Like, I just feel like a lot of this stuff's priced in.
It's sold, and it has sold off a lot. Yeah,
And it's just sold off so much, you know? And so really your question going in is if you're, has it all been priced in? I mean, that's the thing. Or is it just because, you know, liberals don't want Elon working for the government? I mean, who knows what it is? Or this is the crazy thing about Tesla. Is it Elon working for the government and people get mad at that? Or is it the side panels falling off Teslas? It can be both. I don't know.
or neither. It could
Or
be
neither.
something else we're not
It could be
expecting.
something else. That's exactly right. So that's the fun of it. But hey, we'll be here for it tomorrow, and we're excited. So I'm going to say, what are we at right now with Tesla?
227.
Yeah.
Okay, I'm going to put it on the market. I'm going to put my name on it that we're at 211 tomorrow morning.
Wow.
Wait, is earnings tonight or tomorrow?
Tonight after the close.
Okay, tonight. Yeah, I think
Troy's saying down 16, right?
Yep.
211. And and here's I just want to you know, the way to look at earnings, you know, is like Troy's saying, you start with the premise, you know, you could say bullish or bearish if you want, or neutral, but you can say, do I think it's going to beat the expected move or not? Period. And you know, you can do the key, I think, with earnings stuff is make sure, because anything can happen.
Anything can happen.
Be willing to lose what you're, so say I'm willing to risk $500 or $300 or whatever the number is. And it might be just as simple as hey, I'm going to buy, like with Troy's opinion, I might go in there and buy, you know, for this Friday, buy you know, 10 wide or 5 wide vertical put debit spread. Maybe my long put is at a 30 delta or 35, and just do, you know, spend $300 or $200 or something like that.
Just
if
play
it goes down, you can make 100% because it's a vertical debit spread, but very well defined risk. You know what you're out. You know, don't make sure you're aware of how much capital you could, because this is the type of, when you play earnings, you could lose the whole 100% of whatever you do.
Oh yeah. Yeah. No, I mean, I think that's sage and wise advice. I'm putting it down 211, and now I can fade myself and go long gamma with confidence. I feel
Can I be contrarian? I'll put my name down here, but very small.
Oh,
I'm going for 250.
Ooh.
I'm going.
That's only 20. I mean, we're at 230 pre-market. That's not even a 10% move.
You're right.
Listen, this is like Kevin Garnett with Boston. Anything is possible.
Wait, and if it hits 250, I've got to wear what? Doesn't Elon wear black hats? Do I got to wear
black hat, dark MAGA.
Dark.
Are you, Matt? You got to put. I mean,
I need to look at the chart. Dan took. I was going to say
249, Bob.
No, I'd go 251.
251.
I'd go 251. I can't be stuck in the middle.
I love it. All right,
Price
so
red style.
We'll have to review this tomorrow. 211, 250, 251.
And I'm a terrible guesser.
I'm excited.